Hello and good afternoon to this edition of Currency Derivative Corner, and this is in association with MSCI on ET Now. And today to talk about the currency derivative market, what should one be doing, how can one hedge, what is the current scenario in the currency derivative market, we are joined by Mr. Ajay Kedia from Kedia Advisory this afternoon. Thank you so much, Ajay sir, for joining in with us. And I want to just start with the basic, in terms of what is the current scenario that you see in the currency derivative market. What should one be expecting from the currency market? If someone is just entering over here, how should one be looking at the current scenario?
Very good afternoon. Actually, if we see the current scenario of currency derivative market, is been slowly and steadily rising because since last couple of years, the volatility has been quite high. And as we know, India is one of the biggest, we can say, exporting, participating, or let's say importing. So anyhow, in any businesses, currency is going to impact. And also as an investment point of view, we can see some good opportunities are available for Indian investor in currency market. As you know, almost all the business have been affected with the currency movement. And since last, take example, last 1 year period, we have seen dollar has moved sharply towards 114 level in international, whereas rupee has depreciated from 70 to 50 odd numbers last year towards testing near to 83 level. So at this time, there is very much important that how the volatility is impacting your business or whether it's an investment opportunity. One can look in currency derivative with the participating on the exchanges to capture this momentum. And secondly, as we are aware of the currency market gives a very good opportunity. Like for businesses, they can use exchange platform for hedging as they are being very much exposed to the currency volatility what we have seen in last 6 months, because whenever there is a geopolitical concerns or anything happen in global market, then definitely dollar will be impacting, and that will be impacting your businesses also as an investment. One can look for currency derivative platform to capture these opportunities.
Right. Ajay, I also want to understand, obviously we're talking about that volatility in the market as well. If you could just, help us with a bit of a case study or an example that you could give us that, when we know, suppose if as a small business or an individual who's entering this market, if today the prices are expected to go up, the dollars are expected to go up, then how should one be hedging this facility? How should one actually look at this? Could you give us an example?
Yeah, surely, Vinay. See, most of the time we know that India is mostly a importing country. Most of the electronic oils and things have been imported. Let's say a businessman who is importing, let's say, electronic item, and he has done a billing of, let's say, 10 lakh dollar. So now what he's expecting, whenever I got goods and I have to pay in dollar. So his concern is currently the dollar is around, let's say, take a case study that dollar currently trading 81.50. So he know that I have bought, let's say, 10 lakh dollar. So he has to pay accordingly 10 lakh dollar with 81.50 as a reference rate or currency rate. If suppose the momentum is positive for dollar and rupee is depreciating and went towards 83, then definitely his budget will be disturbed, because currently he has made a provision to make a payment around 81.50 as an exchange rate, but now exchange rate has gone up towards 83. So definitely he will be losing some money, or he will be importing on a costlier rate. That is why one should look for a currency derivative exchange to fix, because how he can use this derivative platform. Suppose he has to pay the payment at 81.50. So what he can do, he can buy dollar or book a future on a derivative exchange. And suppose when the dollar comes up or rupee depreciate towards 83 level, so he will make a virtual profit from the exchange, and he will be landing up with the making a physical outflow towards 83. So whatever the difference he has to pay extra, he can take from future derivative exchange, and there will be no impact on that balance sheet. So in this way, he can make a position on currency derivative exchange and make a benefit of this fluctuation.
Mr. Kedia, I also want to understand in terms of, what's your take on the Indian corporate and hedging over there? Are they hedging enough? Are there enough participants? Or yet there is a lot of room that people and corporates and small businesses could actually come on the platform, the exchange traded currency platform, derivative platforms, and actually do a lot more?
Yeah, I think if we compare, no doubt the upper cream companies are being, or we can say bigger companies are definitely taking hedging position on Indian exchange also. But coming on the SME or smaller businesses, they are still available. So I think there is a huge potential while on these exchanges to hedge. Because there is a movement, what we have discussed, the currency movement has been quite wild since last couple of years. So big companies who have been exposed to dollar, euro, pound, they definitely go with the exchange hedging mechanism. Whereas in small, still we expect there is a scope because they need to understand what is the exposure they have and for what period they are being exposed to this type of volatility. So I think in India, hedging is been very keen as of now because of volatility, and smaller business especially they are prone to get impacted because of this volatility. Should try to explore the exchange platform for hedging.
Ajay sir, one more thing is just in terms of I want to understand if one is looking to enter the market right now, what is it that, yes, we're talking about the benefits over here as well. So one thing that they should keep in mind also and be aware of, so that they do not make any mistakes. What is it that one mistake they can avoid when they're just entering here?
See, first of all, currency market is well regulated and been overviewed by time to time RBI and SEBI also. So we think the structure or regulated things have been very robust in India as of now. Secondly, if an individual or corporate is coming in the market for hedging, he should be first of all be aware of volatility in the market. But I can say whatever the volatility what we have seen in commodity or equity market as compared to them, currency market is more stable because government keep on making checks and makes for the stability of the currency. You can just have a look for last 1 month. We have seen, despite of geopolitical concerns and crude prices going ups and down, but despite that, rupee is consolidating between 80 to 50 zone. So this type of stability is already been there. Have to see the lower spread also because whenever we go in a forward contract, there is a very big spread. So he can easily look on a future exchange platform where as compared to other forward mechanism, spreads are quite low. Low risk because it's already you have to pay upfront margin. So there will be a proper risk mitigation mechanisms are there on exchange platform. And again, the strong regulation will make sure there should not be any counterparty risk what we can see in physical market or when we trade in the forward market. So all this already been taken care. I think it's a safe platform one should look to explore for hedging.
Right, Ajay sir. Thank you so much, for joining us today on this currency derivative corner, talking about the market and what should actually corporate or a small company or an individual actually do here. Thank you so much for joining in with us this afternoon.
Thank you so much.